Hello traders, Gary Wagner here just after 12 noon in Honolulu, 6 o'clock in New York. It is Thursday, 4th day of June 2020, and this is the daily report for gold and silver. After yesterday's dramatic drawdown, the opposite has occurred today, with gold trading up about $15 on the day. However, we have the jobs report coming out tomorrow, and depending on how those numbers come in, if they're anything like ADP's, in other words, coming in well under expectations, we could see a continuation of the rally in U.S. equities. We could see pressure in precious metals like gold. But the opposite, of course, is true if those numbers are greater than expected. So tomorrow is going to be an important day, but for right now, we did see a recovery. We'll talk about that in our technical studies, but first to the price board. With the exception of palladium, the precious metals complex definitely recovered today and moved to higher ground. Gold futures, basis the most active August contract, is currently up $15.90, a net gain of almost a full percentage point, and fixed at $1,720.70. When we look at spot pricing, that is up about $12 right now at $17.1130. Platinum gained $6.70 in trading today, $867.20. Silver gained about 0.2% at $17.99.5, with palladium losing almost a full percentage point, a net decline of about $19.30, as it is currently fixed at $1,938.10. But what is most interesting to me is this is occurring with a dramatic fall in the U.S. dollar. The dollar index, as you can see on this daily chart on the lower right-hand side of the screen, has now resulted in 8 consecutive trading days in which the dollar index closed lower on the day. Let's take a look at our technical studies. The first chart that I do want to take a look at on today's show is a short-term 240-minute candlestick chart. What we can see is that gold hit this low back on May 27th at approximately 1684. That's where this low came in. The market then traded to a high of 1760 throughout the end of May. And then in June, we basically saw it flat top and then trade to these lows yesterday of $1,690. Today's action definitely showed a pretty swift recovery, but you get a feel for the oscillation short term that we have seen in recent gold pricing. However, when we look at our daily chart, this of the continuous contract of gold futures, and what is significant when I look at this chart is that the last time we have seen gold close under its 50-day moving average is at the end of March. That is this doji candle here. It is also the star that formed to create a three-river morning star, which in fact signaled the second leg of this rally, the first leg beginning on March 16th, which took gold to its highest trading point this year. However, from that point forward, after reaching the yearly high, we saw gold trade with a succession of lower highs as well as higher lows, and that has formed a compression triangle. But the most important takeaway from what we have seen recently is at all times, gold was able to close above the 50-day moving average, including yesterday's strong and dynamic sell-off, as well as today's $15 gain. So, where do we believe gold pricing will go in the short term? And my sense is that it will follow this compression triangle. In other words, I would expect higher pricing, and we could run into resistance at any point along this resistance line into this particular channel, the series of higher lows and lower highs, until we will get a break at the apex. I believe that break will be to the upside. However, until we see a solid break above or below support and resistance trend lines that we have added to this chart, I do expect the range to continue to compress as we approach this apex. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.